Look, we had the situation in 2000 with NASDAQ where we had, I would say, it was probably the second biggest bubble in modern history. 1929 being the first, the biggest at that point. NASDAQ popped. I guess its ultimate decline was something like 83, 84% from peak. It was massive. The result was interest rates during that period went from 6% down to 1. The Fed just started pumping money in because the world was in chaos. Then the printing of the money started. Big printing of the money started. This is great. They found out that in a disinflationary cycle, you can just pump lots of money in and things look good. And at that point, we had two things happening in the markets. One was, we had currencies have been very quiet. The world was happy. There was no reason for a lot of volatility. Dollar yen was very stable. It was sitting kind of in the mid 120s. And we started loading up on very, very cheap yen call options. Our bet was that in June, when they announced that they were going to freeze all redemptions from the fund, I said, this fund's got to blow up. Well, basically short dollars across the board. Heavily in the yen, positions well in the euro. Across the board, we had everything. But we did it, instead of just going out and buying low delta options, we did ratio spreads where we would maybe sell one and then buy 3 or 4. So for a net premium of 0. So we were buying this absolute junk, the real junk, 5 delta stuff, with the idea that when the world blew, we were sure it was going to blow. They're going to keep going, which is why, if you can get on board a good trend, it's going to last for not just minutes or hours, we're going to go for days and weeks. So I thought that would be ultimately a place where we could put a lot of money to work, where we're going to have a big follow through. And I knew that the option market was extremely liquid, so we could do almost any size. A massive bet on the world imploding, which I was sure was going to happen. I can do it with massive liquidity, unbelievable risk reward, astonishingly favored in our favor. So yeah, I have to take this trade. In a normal world, I would put maybe on a very big structural play like that, 2 to 5% of my portfolio would be at risk. Not a lot. I mean, I don't think that's a lot, but anything that we were doing in terms of these exposures is something that typical retail trader could replicate to some extent. And so we put these plays on, and then we had the bankruptcy declared in 2007 with the fund, and then the world started imploding. And at that point, volatility went from 6.5%, 7% up to 14%. And we had a very, very large book, but we hadn't laid out that much cash, and our portfolio just exploded in value. It was, we'd never seen yen vol sustain below 6%. And we thought the long-term average would be 10, 11. To get there, we needed about a 14, 15%. And lo and behold, the world blew up, dollar yen started crashing off, volatility exploded. We go, oh, gee, that was kind of easy. But in terms of those returns, those are, we'll call exceptional returns, but they're workable, doable for anyone if they have some good ideas and they manage their risk properly, and they use the right types of structures. You will not generate returns like that using just spot markets or just trading stocks around. Can't do it. You would have to be so leveraged that you would have a risk of implosion. And I'd never want that. You really have to struggle with your emotion. And the chaos is in the markets, but not inside of me. And that's something where in my best trading moments, I am absolutely dispassionate. I have no emotional feelings. And so I always try to keep that equal balance, stay objective, stay clear. Whether you're a technical trader, whether you're a fundamental trader, doesn't make a difference. Once you get all excited and you start thinking, oh, I made so much money, you start thinking you're invincible, you will blow up. And so, I've traded various types of systems. I've traded computerized systems. I've done discretionary modeling. I don't think there's a trading strategy I haven't tried. And what I find is that in every instance, to be successful, it's the same basic thing.